Comparing the relationship between price and implied volatility, let's see what we got here. With the market on an uptick and volatility staying relatively bid, this was as of yesterday, by the way, we might want to take a look at a few asset classes to analyze the relationship between the implied volatility of an underlying and the daily price change or the daily change in the price of the underlying. So we're going to analyze the relationship between implied volatility and the daily change in the price of the underlying. Is there a relationship between price and implied volatility? Remember somebody asked the question this morning to us, and they said, hey, is there a certain strategy you use based on a certain level of implied volatility?
Yep.
And we said no.
That's correct.
We said there's certain things we will or won't do, but there's not a certain, we're not looking for something.
There's no tell in
exactly.
Yep.
Let's go to the next slide. So we did a study. We looked at SPY, GLD, USO, and TLT. So we got gold, bonds, crude, and stocks. And we looked at the price and the implied volatility since 2019. We computed the average daily change in implied volatility depending on if it was an up or down move in the underlying. Then we computed the probabilities of seeing implied volatility move in the same or different direction than the underlying. So the probability of both underlying and implied volatility being up or down, or the probability of the underlying moving opposite to implied volatility. So implied volatility goes down, underlying goes up, implied volatility goes up, underlying goes down. The question here is going to come down to, is there a different relationship between commodities and implied volatility as there is between equity indexes and implied volatility? That's your $1 million question, Mr. Batista.
I don't know the answer.
Let's go to the next slide. There you go. Since 2019, the SPY and USO generally carried inverse relationships between their price and the implied volatilities, while TLT and GLD seem to have independent implied volatilities and did not move with or against price. I think it would be no surprise to anybody that SPY had an inverse relationship between price and implied volatility. That, to me, is a given.
Sure.
Everything else here...
If I had a bet on one, I would have definitely put my money on that.
Everything else here would be a complete toss-up to me.
Totally agree. I mean, I would have probably looked at what the correlation to GLD to the market is and maybe made something from there, but I don't know if I would have come back to zero, basically. Right?
Bob up 90 cents. I knew it. Hate myself for that. If you had said to me that in the SPY, and this is if the underlying closes, the underlying closes up, then implied volatility is going to close down, and if the underlying closes down, implied volatility is going to close up. I would say 100% lock, and it was. Everything else, I really would have no idea. I mean, it seemed to work that way with crude oil, but I don't know why.
Yeah.
And today's actually a bucker. Crude oil's up, market's down.
Right.
So today's
unchanged, up 19 cents, sure.
Right. A little bit of a bucker. But I guess my whole point is that this is it's very challenging in gold, crude oil, and bonds to me to think about how.
And it's only last couple of years too. I mean, I think
since 2019, it's almost.
Yeah, no, I know there's plenty of data in there. I get that, but I think markets at time. Listen, there was a time when we would look at bonds and the market. Bonds being a leader of the direction of the market. Now they seem to be a lot more independent. So I mean, things do change over time.
Let's go to the next slide. So. In the SPY, the price and implied volatility moved together 1 in 4 days. In USO, they moved together 1 in 3 days. And in GLD and TLT, price and implied volatility, the same probability moving together as they did inversely. So basically saying that, hey, you can almost set your watch, for the most part, SPY and stocks and implied volatility have an inverse relationship, period. And, 20% of the time they don't, but 80% of the time they do. Everything else, and surprisingly, crude oil, which I'm not exactly sure why, except that I can understand the last couple of years with crude oil acting very weird through the pandemic and things like that, that maybe there was a little more correlation than usual. But I don't think that's going to hold. I think everything else is basically a 50-50 shot. You have no idea.
Agreed. Beautiful.
No, hold on. Let's go to the next slide. So we should mention that the results do not necessarily imply that there would be call or put skew in the underlying where implied volatility is correlated to price. So as an example, the SPY price and implied volatility usually move opposite to each other, and SPY does have put skew. However, USO does not have any put skew, despite its price. Implied volatility.
It's a good observation. They took it a step further.
Yeah, they're just trying to cover all the bases. I don't want to get this thing as too confusing. Let's go to the takeaways. And
the takeaway isn't just where skew is for the correlation. I think that's what they're trying to show.
Yeah. So the takeaways: SPY and USO had an inverse relationship to their price and implied volatility since 2019, while bonds and gold did not. Knowing which assets carry positive, inverse, or no relationship with their IV, you'll know when to add short or long deltas to accompany your short premium trades. For underlyings with an inverse relationship to their implied volatility, we would add short delta to mitigate the effect of an IV increase coupled with a drop in price. That's like stocks, for example, and that's what we do. But I think the real takeaway from this is that Tony and I will sit here and we'll say, you know what, they're killing vol today. Okay, they're killing vol. Well, if they're killing vol today, that means that we don't think they're going to sell off stocks. But we really have no clue what that means for anything else.
Right.
The argument from this would be that it also means the crude oil could be kind of strong, as based on the last 4 years. But beyond that, it doesn't really mean much to us. And I think that's the real takeaway. It doesn't,
which is odd because crude oil only has a 38 correlation to the overall market itself.
Well, it doesn't mean anything with respect to stocks. I mean, with respect to bonds, we know that. It doesn't mean anything with respect to currencies. It doesn't mean anything with respect to gold. And so there's a little bit of a relationship with crude oil. But for the most part, this is just saying that when we say volatility is bid today, that's going to mean we're not really expecting the stock market to rally. And we're saying volatility is we're not really expecting the stock market to sell off. But other than that, everything else is up for grabs, all the commodities.
Very good, sir. Let's do a quick 90-second break and come back. We got more Tasty Live coming up next with, oh joy, Mr. Scott Sheridan. This is Tasty Live.